3 ways Trump firing Powell could backfire explained. Imagine a scenario where the very foundation of the U.S. economy is shaken, not by a financial crisis or a global pandemic, but by a single, controversial decision from the president himself. What if President Donald Trump actually fired Federal Reserve Chair Jerome Powell? This isn't just a hypothetical question. It's a move that could send shockwaves through the U.S. economy and global markets, with consequences far beyond what most people realize. But here's where it gets even more intriguing. While Trump has openly criticized Powell and even brandished a draft termination letter, the real story lies in why this move could spectacularly backfire, and how it might affect everything from your wallet to Wall Street. For now, the odds of Trump actually ousting Powell remain low, thanks to legal hurdles and pushback from his own economic advisors. Yet, the mere threat has already caused ripples. Investors, though seemingly desensitized to Trump's rhetoric, aren't taking it lightly. And this is the part most people miss. Even the threat of firing Powell has the power to destabilize markets. For instance, when reports surfaced that Trump might fire Powell, the U.S. dollar index dropped nearly 1% in a matter of hours. While Trump later walked back his comments, the damage was done. Markets had already sent a clear warning shot. But why does this matter to you? Let's break it down. The Federal Reserve's independence is often called the closest thing to a free lunch in macroeconomics. It allows the Fed to focus on stabilizing prices and managing employment without political interference. If Trump were to fire Powell, it would unleash a storm of uncertainty, litigation, and market turmoil. Here's how. First, bond markets could revolt. Long-term bond yields might spike as investors demand higher returns to offset the perceived risk. This wouldn't just hurt investors. It would raise borrowing costs for everyday Americans, from mortgages to car loans. Second, the U.S. dollar's status as the world's reserve currency could be severely undermined. Investors flock to the U.S. because of its stable institutions and rule of law. Compromising the Fed's independence could erode that trust, leading to a flight from the dollar. As Francesco Pisol, an FX strategist at ING, puts it, firing Powell would be a highly toxic mix for the dollar, with long-lasting damage. And here's the controversial part. While some argue that a new Fed chair might lower interest rates, a potential short-term boost for stocks, experts warn this could backfire catastrophically. If inflation surges, corporate earnings would suffer, stock markets could crash, and American consumers would face higher prices just as inflation was starting to stabilize. As Peter Ricciuti of Tulane University notes, investors will realize that an independent Fed is vitally important to both the markets and the world economy. But is Trump's criticism of Powell justified? He's repeatedly accused Powell of not cutting interest rates fast enough. Yet, ironically, firing Powell could lead to higher rates as markets lose faith in the Fed's independence. This raises a thought-provoking question. Is Trump's push for lower rates actually setting the stage for the opposite outcome? The stakes are higher than ever, especially with Trump's tariffs already pushing up prices. As Dominic Papalardo of Morningstar Wealth warns, undermining the Fed's credibility could make it harder to tame inflation or stimulate the economy when needed. And this isn't just an economic issue, it's a trust issue. If Americans lose faith in the Fed as a wise steward of the economy, the consequences could be far-reaching. So, here's the ultimate question. Is Trump's relentless criticism of Powell a risky gamble for short-term political gain, or a misguided attempt to fix a problem that doesn't exist? Let us know your thoughts in the comments. This is one debate where every opinion matters.